one of the things that we really want to address is creating some form of a calendar for this minimum regulatory capital to be incorporated in the company. So instead of needing to have 15 million reais in the beginning, we want that the companies can slowly contribute capital to their companies and have at least 2 years for them to finish the final contribution.
Hey everyone, welcome back to Brazil Crypto Report, a podcast produced by Activo Media and Advisory. I'm your host, Aaron Stanley, and today we have a very important episode discussing new VASP regulations from Brazil's central bank. The market has been waiting for these for almost 3 years now, and they have massive implications on Brazil's digital asset industry moving ahead. So to tell us more about this, we have Carlos Eduardo Russo of BlueGreen, and we have Cesar Carvalho of Baptista Luz Advogados. And both of them have been heavily involved with ABToken's government affairs work, in addition to their personal practices. So before we discuss that, I want to give a quick shout out to our show sponsors. We have Avenia, which is building seamless infrastructure for cross-border payments in the Americas. And we have Figment, which provides institutional staking services to more than 1,000 financial institutions globally. And we'll be hearing more about them a bit later in the show. With that, I'd like to welcome Cadu and Cesar to the show. Thank you both for being here.
Thank you. Glad to be here.
It's a pleasure being here, Aaron.
Amazing. Appreciate the time, guys. I know you guys have had pretty busy weeks. We just had the regulations issued on Monday, and you guys have been probably on the phone ever since answering questions. So appreciate you taking the time. So I'd like to start off with just a quick round of introductions and maybe just tell us a bit about who you are, what you're working on, and how you've been involved in the regulatory process thus far. Cadu, you want to go first?
Absolutely. So again, thanks for having us here. And myself, I'm the CEO and co-founder of BlueGreen. We're going through a rebranding process, so BlueGreen will be called Bloco soon. We'll go public with that very soon. I'm also involved along with Cesar and ABToken, the Brazilian Association for Tokenization and Crypto Economy. We are both a part of the ABToken team, the board. And before that, before founding BlueGreen, I was also a co-founder of Transfero, which is another very important player in the region. Transfero developed the first stablecoin and a lot of new products that were quite unique at the time. Also I've been working with financial markets for the last 10 years, investment banking as well. And here to answer all the questions you have about this, and I'm pretty sure we'll have a very good conversation.
Awesome. Cesar?
I'm Cesar. I'm a partner at Baptista Luz Advogados, as you said, and where, as a matter of fact, I lead our fintech, banking, and crypto practice. I'm also the government affairs director at ABToken. So, as Carlos just said, a civil association that basically represents the interests of the Brazilian tokenization and crypto industry before policymakers and regulators such as the central bank. And I was very involved, of course, in these public consultations, working closely with Carlos and other main players of the market here in Brazil, through, of course, ABToken. I would say through the entire process that we have been living along with the central bank through these 3 years that we are that you just described, Aaron. So happy to be here and to answer your questions as well.
I think to start off, I would love to maybe do just kind of an overview of what's all in this package of regulations. There's a lot in there, but Carlos, you maybe want to go first and just what are kind of like the main high level takeaways that people need to know from this new regulatory framework they've unveiled?
It's a very robust regulation. So we have 3 main resolutions that basically address all things all virtual asset service providers need to understand about this future market in Brazil. So there's one part of the resolution that talks a little bit about the application process. So everything VASPs need to comply with before becoming an authorized entity for the central bank, enabled to operate with virtual assets. So that's one of the resolutions. And the other resolution, which also has a lot of impacts in the market, is a resolution that talks about the usage of crypto assets as a tool for international transfers. In Brazil, there is what we call the FX market. So it's a heavily regulated market, different from other countries in the world, such as the US or Europe. In Brazil and in a lot of emerging countries, the FX market is heavily regulated. There are a lot of reports that need to be reported to the central bank, and we're gonna go through all the requirements and what kind of transactions are actually part of these FX markets. We have some stable coins that all stable coins transactions will be part of the FX market. In a sense, we can talk a little bit about it, but it's really a very huge regulation, and I think we will have enough time here to cover almost the main points here.
Maybe to get started, we can touch on, there's a lot of points I want to touch on, but maybe to start off with, obviously anytime, I always like to look at like regulations kind of through the eyes of, okay, who's maybe the winners and the losers here. Maybe that's maybe I don't know if that's the right way to look at it or not, but that's just how I kind of like to process these things. But let's talk about like, what are the areas that, you think they got right? Maybe we'll start with that. And then there's a bunch of other stuff that's maybe a bit more controversial, but maybe let's start with the stuff where like, what do you think that they got right in this whole undertaking? Maybe Cesar, you want to jump on that? Figment is the leading independent provider of institutional staking infrastructure, with over $18 billion in assets under stake and more than 1,000 clients across Latin America and globally. Banks, exchanges, fintechs, and asset managers can earn secure and compliant rewards on proof-of-stake networks using Figment's non-custodial infrastructure. They offer everything institutions need to stake with confidence: point-and-click staking, real-time portfolio tracking, powerful APIs, audited infrastructure, and industry-leading slashing protection. Head over to figment.io to learn more. I'd like to take a moment to tell you about our show sponsor, Avenia. If you're building a wallet, a crypto consumer app, or a global payment platform, Avenia is your bridge to Latin America. You can instantly connect to PIX, SPAY, and CBU using stablecoins with a single API. No banks, no FX desks, no SWIFT. Head over to avenia.io to learn about how you can move money globally with full compliance and real-time settlement. Now back to the show. But maybe let's start with the stuff where like, what do you think that they got right in this whole undertaking? Maybe Cesar, you want to jump on that?
Sure. As a matter of fact, before I think diving into the details on the right things that come from these rules, I think that it's really important to recognize, Aaron, the remarkable work done by the central bank through this entire process. We had in these 3 years basically 4 public consultations: the public consultation 97, 109, 110, and 111. And from day one, the central bank worked on these rules with a lot of humility, openness, I would say, and a kind of a democratic mindset. So it's really important to say that you can see that in the final text that was published on last Monday. At ABToken, we run, just to make it very clear, we run a full comparison between the final resolutions that were enacted on Monday and the earlier drafts that came from these public consultations, and the number of changes is impressive. It should, and I think that it's important to highlight here because it shows very clearly how seriously was the work that was made by the central bank through these all public consultations. So, many of the keys, and entering into specifically your question here on the main points that we may consider that are right points from the perspective of the market and from the perspective that we have in our civil association in ABToken. Many of the keys that we raised through our manifestations and that are really connected with the manifestations that were made by other players in the market, including ours, of course, are reflected in the final text. We can read that very clearly when we analyze the text that were published on Monday. So a lot of topics that we discussed through these public consultations directly, including directly with the central bank and the departments that were working on these texts. A lot of points that I can raise, for example, and some points that we discussed here with you, Aaron, in Brazil's cryptos report and directly with you. So, for example, removing the idea of forced self-custody or clarifying the treatment of global order books, transactions. That was a really important point that was, fixed in the final text of the resolutions, and several other important points that we can discuss here after our introductions. But I think that that text that were enacted by the central bank really shows profound work that has been done, and the humility, openness, and democratic way that central bank, touched that important thing since the beginning, since day one. So that would be my comments from the right way central bank, touched that regulation.
Yeah, I agree. I think, referencing back to I think we did like an X Spaces a few months ago after the central bank had proposed like a prohibition on self-custodying stablecoins and some things of that nature, which I think the market was very taken aback by. But I think to your point, the central bank, they kind of took the time to listen to the industry and hear out, okay, what are the arguments for this? And they've adjusted that text. Or they've modified that to something that's maybe not quite, it's still maybe not like exactly what people wanted, but it's not quite as severe as what they were originally proposing. Carlos, do you want to chime in here as well? I mean, what do you think are the points that were like, hey, like they really nailed this? Like this is something that kind of everyone can agree that, hey, this is the best thing for the market overall. What do you think they got right here?
No, great question. So for me, the most important point that I think it really shows that the central bank recognized the existence of the market. So, as I said in the first moment, the FX market in Brazil is heavily regulated, and the central bank didn't recognize before that using stable coins or any type of virtual assets to carry out cross-border transaction was a valid way to do that. So it was kind of a gray zone. So many companies were afraid of using stable coins as part of their, let's say, cross-border process because it was not regulated by the central bank. And there was a huge discussion here among, I would say, the entrepreneurial scene, if there would be, let's say, risks associated with providing cross-border services with stable coins. For example, fines by the central bank or other types of sanctions that companies operating that way in Brazil could face, just because this market wasn't regulated yet. So for me, the most important thing, and I think they got it right, was actually recognizing this market. So that's very clear. And they not only recognize this market, but they go beyond and they say, if by February, when the resolution becomes effective, you are already operating with stable coins and other types of virtual assets, including using virtual assets as part of cross-border transactions, then we understand that you were already operational and we let you continue to operate until you make the final application. That's a huge thing. For me, this completely changed the scenario here because it is a validation that the business model that many companies developed in the last years is a valid business model, and the central bank recognizes it. So that's one, I think it was a huge thing for the market and for the companies that operate here in Brazil. Other things that I think were good and were different compared to the initial public consultation, as Cesar mentioned. For example, now we understand that transferring virtual assets to self-custody wallets, it's possible because based on the text of the public consultation, the central bank wanted to ban it. And of course, if you ban, transferring virtual assets to self-custody wallets, even if it's just stable coins, which was originally proposed, that's not good, and that's not good under any circumstances. So I think as Cesar, commented, central bank has this humility to recognize the importance of allowing self-custody as part of the market, and now they allow it. However, they introduce the concept that any transfer to self-custody wallets is part of the FX market. So it was kind of, I will allow virtual assets and including stable coins to be transferred to self-custody wallets. But on the other hand, I want to have an extra control over it. And this will be part of the FX market. And this opened the possibility for taxation in the future. That's another topic that I think we should cover next. But anyway, but apart from that, I think, asset segregation is an important concept that was introduced in the resolution. So all virtual asset service providers, they should segregate assets from their customer. That's expected, and that's a good thing about the regulation. Another thing, all these companies will need to go through audits. So also very important. We are, of course, dealing with other people's money. So the central bank introduced a lot of obligation and requirements that are, important for these companies to have. And so I think, considering this, they got it right. Of course, I believe there were things that they got it wrong, and we can also talk about this next.
Well, and just this idea that they're taking crypto and they're basically combining it, they're folding it into the existing framework for regulating foreign exchange, right? And I guess this is sort of a new concept to me. I hadn't heard them maybe using this messaging before, and I haven't really heard of maybe other countries globally like framing it this way either. But is this something that has precedent, or is this something that they're kind of doing? Like, are they kind of just like going off on their own and doing this? But I guess I hadn't heard it like framed in this context before. Like, hey, we're just going to take crypto and basically lump it underneath how we regulate foreign exchange. Cesar, you want to maybe take that one, and Carlos chime in if you have something to add?
I would say that it's something that is not new, of course, because it's something that we could see in the first draft of the public that came together with the public consultation 111. So we were kind of expecting something like this in the regulation. Of course, we tried through our manifestations to define better and more deeply what would be considered a transaction involving a virtual asset that would be deemed as an FX transaction. But these definitions didn't come with the final text that we can read now. So unfortunately, they simplified some things that we were trying to push the central bank to have more details on. So we tried in our manifestation, for example, to make very clear that only transactions that were using virtual assets, crypto assets, for the purpose of, for example, a cross-border transaction, only these transactions should be under the FX market regulation. And perhaps for some reason that we don't know for now, of course, we will have some discussions on that specific point with the central bank in the future, in the near future, I would say. We are trying to reach them to have this kind of discussions, of course, through our civil association here, ABToken. But one thing that I may say is that they try to simplify, and perhaps in simplifying too much the text, probably they now are touching more transactions than they should. So it's an important point that you raised, and it's directly connected with the point that Carlos just described to you. But it's something that we should explore more deeply with the central bank. One thing that it's really important to bear in mind, Aaron, is that the central bank to really recognize that these regulations, they are the first package of documents that will regulate our whole system, the crypto system here in Brazil. So they are very open to receive more manifestations, to receive more impressions on these rules, because we know that they will have to be completed. They will have to be, amended in the near future, probably. So these kinds of ways of thinking, it's something that we can note when we observe the way the central bank is touching these points. This thing is really important, because I know and we know that they are open to discuss. So it's I do think that one of the points that we will need to discuss is that point that we just described here.
Just going to add that I agree with Cesar, and the central bank has been very open to discuss, important topics to the industry. We felt this openness when we were, as part of the Brazilian Association, talking to them. We scheduled a lot of meetings. As Cesar said, many of the points we addressed, they listened. For example, we wanted the trading books, let's say Binance, Mercado Bitcoin, Foxbit trading books, and all trades that happen there, even if they are USDT or USDC trading books. So these trades, they are not part of the FX market. So that's very important, because we protected the book. So it doesn't matter if later on our Federal Bureau of Tax, right, the Receita Federal, if they decide to start to collect taxes on stablecoin transactions, the transactions that happen within a trading book, they are protected from taxation because they're not part of the FX market. That was one of the victories that we managed to achieve, just by talking to the central bank and taking our points to them. So I think they're very open. And a few things that I think they should, very soon address. So one of them is the limitation for what I call the pure VASPs. Let's say the entities that are only VASPs, they will only have the VASP authorization. They have $100,000 limit per transaction. That's 5 times lower than other regulated entities that will accumulate the VASP authorization will have. For example, FX broker dealers, securities broker dealers, and distributors of securities, other types of authorized or entities in Brazil. They will have 5 times more capacity than a pure VASP to do stablecoin transactions when those transactions involve cross-border payments. So I felt it was a little off in terms of trying to level the market in terms of different entities being able to compete under the same conditions. So the pure VASPs, they are now, based on the tax that was released this week, a little bit behind in terms of competitiveness, right? So this is something I think we should address very soon in order to kind of level the market again among other players. And another thing, and has nothing to do with the resolutions that were enacted this week, but it has to do with other resolutions that were enacted last week, is related to the minimum regulatory capital for central bank authorized institutions to have. This is another important thing to discuss. The central bank put a very high bar for all authorized entities. So in the case of VASPs, there is a minimum of almost 11 million reais if you apply for a custodian license, a VASP custodian license. And if you apply for an intermediation license, a VASP intermediation license, you go as high as almost 13 million reais. If you have the full broker VASP license, it goes as high as almost 70 million reais. We're talking about, more than $5 million just to become a crypto company in Brazil. And we know, and we have, many companies that are part of our association that, they don't have millions of clients such as Binance, and they probably won't be able to make it in terms of minimum regulatory capital. And they will need to, just review their strategy and their business. So this is something that we also need to discuss in the next year.
Yeah, I mean, this was going to be my next question, actually, related to these capital requirements, because it seems like this was sort of like a cold shower, that the industry got hit with. I think in the original consultation, they were proposing figures that were like 10 times less than the figures that you just mentioned. I guess, for one, like, why a 10x increase from what they were originally proposing? And is this, from what I can tell, from what I've read, it looks like there's not really a precedent for this in Europe with MiCA and in some other places that have also implemented similar regulations. It doesn't seem like there's a precedent for this sort of thing. It seems like they're kind of I don't want to say just making this up out of nothing. I'm sure they have a reason for why they select these numbers, but it's not just like, oh, well, Europe's doing this, so we need to do it too. Like, it seems like they're going kind of well above and beyond what other jurisdictions have chosen. So I would love some more. Cesar, you want to maybe jump on that? I'd love some more color on this minimum capital requirements issue, because it seems like people are really sort of not happy about this.
No, it's really important to clarify, Aaron, that this is not only affecting the crypto market. So this is a direct consequence of the recent fraud case involving regulated companies, and it applies to all financial and payment institutions here in Brazil. So not just crypto. So of course we were touched because the regulations that increased the minimum capital and minimum net worth for all regulated companies here in Brazil, regulated by the central bank, of course. These rules were enacted last week. So we are being affected right now, the crypto market, because of the regulations that came last week and not this week. But of course, the regulations specifically apply to the crypto market, just as we just described, resolution 519, 520, and 521. They reflect, of course, the same kind of way of structuring the minimum capital and minimum net worth, because of course they reflect considering that VASPs will be regulated companies by the Central Bank of Brazil, they will need to fulfill the same requirements that are applied to the whole system. So, and it's really important to highlight that these are direct consequence of the fraud cases that we have seen.
And you're referring specifically to the PIX attack from, was in July, when the central bank reserves got drained because somebody had hacked into like a PIX service provider and they were able to drain a bunch of money out of. Yeah, that's a whole nother whole nother story, whole nother topic, I guess. But, so because of that, the central bank just sort of said like, hey, like we're going to force everybody to maintain more capital and reserves just in case this type of thing happens again, because we're not 100% confident that like the system is like there's some vulnerabilities in the system and they're not comfortable with like the existing capital requirements, basically. Maybe Carlos, let's talk a bit about like how specifically do these capital requirements apply? Because I know there's an asset segregation component to this as well. So if I'm an exchange and I've got my operating capital, my own proprietary capital over here, and I've got these accounts over here with my customer funds, like, do I have to hold capital against the value of the customer accounts as well? Or am I just holding capital against the value in my own proprietary assets? Or like, how does that exactly work? Like, how are they calculating how much I need to have in reserve?
Yeah, at this point, there is no, let's say, correlation between the amount of assets that you hold from your customers being equivalent to the amount of proprietary assets that you need to hold in your balance sheet. There is no relation. What happens is let's say, depending on the number of activities that your entity operates, you should, add up capital based on that. So, for example, if you are just an intermediary, there's a certain amount of capital that you need to have as proprietary capital. If you are an intermediary plus a custodian, then it adds up and you need more capital. But these requirements are quite high, right? It's not like 1 million and 3 million as it was suggested in the beginning. It's like, 10 mil, 15 mil. So it's much higher than what was expected. But again, answering your question, there is no direct relationship between, let's say, the amount of assets that you hold from your customer and the proprietary capital that you need to have. So the same regulatory capital that Binance will need will be the same regulatory capital that a very small, crypto wallets will need in Brazil, which is quite unfair, to be honest.
Okay, that's helpful. And then moving on to a couple of other, I guess, controversial topics, or topics that I've seen people maybe taking issue with. The information reporting requirements. So from what I understand, exchanges, VASP will now, they're already required to report to the Receita Federal, right? Their customers' transactions on a monthly basis. Now they'll also be required to report all this information to the central bank. Is that correct? And then also, whenever there's a customer withdrawal to a self-hosted wallet, to like a Ledger wallet or a MetaMask wallet or something, the exchange would need to first identify, like they need to kind of link like the on-chain address to a CPF or something like that, identify who's the owner of this wallet, and then report and also the value of the withdrawal, and then report all that information to the central bank as well. Am I understanding that all correctly? Is that accurate, Cesar?
Yes, you are correct. And I think that this kind of obligation or duty that the VASP will have to, fulfill and perform after, of course, these regulations enter into effect on February 2. These are kind of ways to, to compensate what, from the perspective of the central bank, would be something that they open. So, as a matter of fact, at the beginning, we had a total prohibition of self-custody. So in exchange of having or imposing that, they proposed something different, what would be what you just described. So I think that this is something from the perspective of the central bank and how they enacted these texts, these regulations. I think that they were kind of, opening something that was closed. So that's the reason why I'm not seeing that specific point that you mentioned as a bad topic for us. It's something that it was a victory. So when we were kind of describing the victories that we had in pursuing, the points that we raised in our manifestations, one of the points was that the exchange, from supporting the central bank with some information in exchange of having this kind of prohibition on self custody. So it's something that I think was a victory in some. It's a victory from my point of view.
Well, it feels kind of like we'll use like a Donald Trump tariff trade war type analogy, where you come out and you say, hey, I'm going to tariff you 100%. And then, like, oh, that sounds bad. Like, okay, let's come to the negotiating table. Well, now I'm only going to tariff you 50%. But originally you're paying 0%. So it's like, yeah, it's not as bad as the original proposal, but you're still like, it's still not like a great outcome, right? I don't know, Kaidu, what do you think? Is this? I mean, I guess I think there's both the principal question of like, should people have like the right to be able to self custody, anonymously or with privacy or whatever. But then I think there's also the operational question of like, I mean, we're creating just like massive honeypots of financial data here that, I mean, if we're worried about cybersecurity and hacks and stuff, I mean, this is just like, it seems like just easy pickings for any kind of sophisticated hacker to come in and access these people's personal information and whatnot. I mean, is this like a reasonable thing to ask these exchanges? I mean, it just feels like the solution to these things is always, we just need to collect more data. We need to collect more personal data from people, right? And that's just like, that's the answer to every problem. Just we need more data. But what do you think?
Yeah, I look at a few comments on X, and many people are concerned about this lack of actually these leaks of information, and it's a very sensitive topic, especially in a country like Brazil, when a lot of security concerns and people are 100% afraid that this type of information, let's assume you have 10 Bitcoins. If this information falls on the wrong hands, you might be in trouble. That's a situation that I see a lot of people concerned about it. And I think it's a valid concern. Of course, the exchanges will have, their own security policies and information management policy. They will operate as regulated financial entities. They will be equivalent to regulated financial entities. So it's not the case that, if there is a database in a bank like Bank Itaú, stating your balance in this account, it's not the case that this information will be made public. It's very hard for this to happen, but it might happen, right? And in the case of crypto assets, that is a specific concern, that if you go to the bank application and try to withdraw like 10 million reais, it's not possible, right? Because the bank has a lot of controls and limitations depending on the time you are trying to make a withdrawal. But if you go to, at least as of now, if you go to a crypto application and try to withdraw 10 million reais, you will be able to do this. That's actually something that happens a lot of, all the time. People are withdrawing huge amounts because you have even companies operating this market as, companies doing arbitrage and things like that. But anyway, I think it's an important concern. However, in the point of view of the central bank, there is this, the central bank needs to have more information about capital, going outside of Brazil, capital coming in Brazil. And that's, let's say, statistical information they want to have when they're, preparing all the central bank reports, calculating, they need to understand the nature of these transactions that are involving crypto assets, because the way it is right now, if you send stablecoin to another country, the central bank doesn't know the reason behind it, and it kind of jeopardizes their regulatory reports, their central bank reports, because they miss this information. So when we say, okay, now all crypto transactions to self-custody wallets will need to be reported to the central bank, and this operation will be part of the FX market, it has less to do with the risk of data leaks, because this could happen even if those transactions were not part of the FX market. That's not that's not the thing here. That's not the concern here. I think the main concern here, let's say from an individual level, when we say, okay, all withdrawals and deposits from self-custodial wallets will be part of the FX market, the main concern here is the risk that this type of transaction will suffer taxation and IOF taxation. So there is a chance that all the list of transactions that the central bank included in the FX market, all crypto transactions included in the FX market, will eventually become taxable because they are part of the FX market. That's the main concern from an individual level. We know that currently stablecoin purchases are not subject to IOF because stablecoins are not part of the foreign exchange market. So once they become part of this market, there is a very high likelihood that our tax bureau, the Receita Federal, will decide. Of course, they need to have a law first. So that's another thing that maybe Cesar can talk about. But and that's the next steps. That's what we believe will happen. We believe that Congress will start to formulate a bill in order to change the IOF decree that talks about taxation on foreign exchange transactions. That might be a next step from the government trying to pass a bill that would include also crypto assets that are part of the foreign exchange market as a taxable transaction. But this will take some time. It's not that it's going to happen overnight. It's not happening tomorrow. But in 2 years, 3 years, we might have a situation that these crypto transactions that are part of the foreign exchange market will be taxable. So if you, for example, transfer Bitcoin from a centralized exchange to your self-custody wallet, you might be paying 1%, 2%, 3% just by transferring your Bitcoin. And that's the actual risk. I think it's even more than data leakage, the risk of taxation.
Interesting. Yeah, this was going to be my next question, actually. Like it says, just really quick. So I think this was going to be my next question. So I just wanted to expand on this slightly. And yeah, I want to know, like, does this kind of open the door for the Receita Federal to come in and start taxing stable coins or even just broader crypto transactions with IOF taxes? And then I also know, like, the last 6-9 months or so, we've seen this explosion of like these neobank type platforms that are even kind of advertising themselves, marketing. It's like, hey, we're stable coins, so we don't need to pay IOF, right? Or you don't need to pay IOF if you use our platform, right? Like they're like directly marketing themselves as this. Like, hey, we found a loophole, and it's not like a secret anymore. And I also noticed as part of these regulations, they're imposing limits on card issuers. So if you're issuing a crypto card, like a card that where you have a balance in stable coins and you can make a local payment via Pix or via card rails, using like your USDT balance or whatever, that card has to be like a Brazilian issued card now, which it kind of seems like that's also maybe a cold shower for some of these neobank platforms that have been operating here. But anyway, Cesar, would love for you to get comment on some of that stuff.
If I may, just a very quick comment on the last question, because it's important to say that these reporting requirements, they come alongside with a significant increase in the cybersecurity, internal control, and data protection obligations applied to the whole system, which means all the regulated financial and payment institutions here in Brazil. So I don't see, I I completely agree with Carlos that it's a valid concern when you talk about, for example, or think on data leakage or honey spots for hackers, but it's really important to pay attention and see these requirements or reporting requirements alongside with the increase of the requirements and regulation duties and obligations that will apply on all these institutions, and this is being built together at the same time in parallel. So it's something that we need to bear in mind. And I completely agree with Carlos that the main concern here is taxation. So entering specifically on the question that you raised, stable coins and IOF, it's hard, of course, in Brazil, it's hard to predict what will come, from Receita Federal. But giving the government's revenue-oriented, way of thinking and producing the last movements, in the Congress and by the government itself, I think that it's very likely that this regulatory framework will be used as a kind of a foundation to support a new taxation, probably regarding IOF. So I think that Receita Federal tends to move, yes, once in a robust regulatory structure through which they will apply IOF on these transactions, the transactions that are classified as FX transactions through crypto assets according to Resolution 521. So I completely agree with the perspective that Carlos just presented to us, that the main concern here is taxation. And it's important to say that this concern doesn't come directly from the rules that were enacted by the central bank, but indirectly, because they should depend from some clarification and perhaps other rules from our Receita Federal here.
So the concern is the door's open for additional taxation, and it may not necessarily be a new tax, but just a broadening of the application of the IOF tax to include stablecoins, which, as I understand it doesn't apply to stablecoins now because IOF only applies to transactions that are in fiat, and a stablecoin is obviously like a digital representation of fiat. So, but basically, if you like off ramp from a stablecoin into a fiat currency, then you might have some IOF implications. But if you're just transacting in stablecoins or in crypto, it doesn't necessarily apply. And then, I guess, let me know if I'm understanding that correctly. But then I also want, maybe Kaidu, would love for you to tackle this like neobank question as well, because I feel like there's some, maybe some interesting restrictions here that folks should be aware of. Because I know there's a lot of these neobank platforms that are trying to enter the Brazilian market right now, and I don't think that many of them have like physical operations like set up here. So what's the implications for these guys, given some of the new like potential IOF tax looming, but also some of the new regulations around who can issue crypto debit cards?
Yeah, no, that's a very good question. It's not let's say a simple issue. It's a very complex issue. If you use crypto assets as part of a broader cross-border payments transaction, right? So if you are an individual or a company and you're simply acquiring stable coins, this USDT or USDC purchase, this is obviously currently not subject to IOF, right? So that's very clear. However, what many companies and individuals want to accomplish by acquiring stable coins is actually transfer the stable coin for another type of card arrangement, or even off-ramping the stable coin abroad and paying a supplier or a counterparty in US dollar. So in the end of the process, what many people are trying to accomplish by acquiring stablecoins is actually making international payments. And that's where we have a gray zone, right? And it's not, let's say, it's not something that we can, say for sure here, that because there are different interpretations for the situation. Of course, if you, just buy a stable coin and send a stable coin to someone abroad, based on the text and the resolution released this week, this operation shouldn't, this transaction shouldn't trigger IOF taxation just by, buying stablecoin and sending stablecoin abroad. But if in the end of the process, you're actually delivering fiat currency, which is the US dollar or any other type of fiat currency, there is room for interpretation that taxation, IOF taxation should be applied because, you just use the stable coin as a tool, as a means to actually, make a final payout in a fiat currency. So there is a lot of room for discussion, although we might have different views. Many companies, they are taking the risk of, having this favorable interpretation over, this IOF rule. But yeah, I mean, we still need to wait for maybe the final position from Receita Federal in order to understand better the scenario. But it's very tricky, and it's not a, let's say, we cannot give a definitive answer for that.
Got it. And then, do you want to tackle the neobank question as well, the card issuer question? Because I know that's a hot topic right now with folks trying to enter the market.
You mean like the neobanks offering international cards for people to spend?
Well, because there's part of the regulation was that if you're issuing a crypto debit card, it has to be like a Brazilian localized entity issuing the card, right? From what I understood, which would mean that like a lot of some of these international players that are like even thinking like a Cast or somebody they're kind of like this global company, but they have like kind of local rails in these different countries, and you have your balance in USDT. And then you spend at a local merchant, and it just converts into reais every time you spend, but you're maintaining your balance in USDT. From what I understand, like that's like those companies would have to have, like a card can only be issued by like an authorized central bank, institution. From my understanding of what was in the regulations.
Yeah, maybe I'm not sure if Cesar has more information about it. I don't see any restriction for a Brazilian user to, consume international financial services from a fintech that is based in Hong Kong or in the US, based on what I've read from this last resolution. But I'm not sure if Cesar has any color on that.
No, I completely agree with you. There is no prohibition. What resolution 521 says is that they included in the FX market the transactions that basically through transferring virtual assets from or to a client of a virtual asset service provider or of VASP for the purpose of fulfilling, obligations that come from international use of cards. So these transactions that use virtual assets to, to make the payments that come from these kind of transactions, these transactions are connected and considered an FX or a transaction that would be under the FX market here in Brazil. So because of that, you will face some implications, of course, of reporting this information, this kind of information of these transactions, or that come from these transactions to the central bank, and some implications regarding, not the issuance of the card, but the way you will have to, pursue to make these payments properly according to Resolution 521. But this is something that it's more complex than a simple prohibition, Aaron. And this is the obligation that I see that comes from the regulation that was enacted on Monday.
And also, Aaron, we know that a lot of companies offering these international cards. You mentioned Cast, there's Crypto.com, many other companies doing this type of offering to Brazilians. And that's actually not uncommon. We have, Nomad Digital, we have Avenue, other fintechs that also offer international cards, even banks. They're doing this, BTG, Pactual, C6 Bank. A lot of banks, they offer these international cards to Brazilian. Again, I don't see any prohibition to that. I think what Cesar is trying to say is if you try to, after regulation, if you try to send crypto assets to fund an international card, this will be part of the FX market and subject to taxation in the future, right? Just by sending USDT to fund such cards. And if you have a locally issued card and you use your USDT balance to pay for, let's say, the monthly credit card bill, if you use a crypto asset to pay for this credit card bill, in case this purchases, they are abroad, outside of Brazil, if you use crypto assets to kind of, cover these international expenses, this is also part of the FX market and subject to taxation. So that was my understanding as well.
Got it. Okay. Thank you for clarifying that. That's helpful. Yeah, it feels like a very complex issue that's maybe not as black and white as maybe I had read in some of the analyses I was looking at. So maybe last question here, because I know, Cesar, you got to run here in a few minutes, but looking at this new regulation holistically, I know one of the reasons that folks in the industry were clamoring for regulation back 3 years ago was, I think some of the local exchanges were complaining that, look, we can't compete with these international players because, for XYZ reasons, and we need, some regulatory. We need kind of a regulatory framework that sort of levels the playing field for everybody. Does this regulation do that? Does this create a level playing field for local exchanges, international exchanges, local fintechs, local banks, or is there? It feels like obviously anybody who's a smaller player in the market is going to have a hard time surviving here. But does this at least ostensibly create more of a level playing field, Cadu?
Yeah, I agree with you. I think this regulation actually creates this level playing field for all the players. One of the concerns of local players was especially, because international exchanges, they had a more loose compliance. We saw, a lot of things going through Binance, for example, and other international exchanges in the past. Of course, these entities, they end up, implementing more restricted processes for compliance in recent times. But I think when the central bank comes and create the rules of the game, and that these are the same rules for everyone, then you cannot have this complaint anymore. You can no longer have this complaint that, this foreign exchange comes to Brazil with very loose compliance and doing a lot of, prohibited things here. No, now everyone is under the same rules. And in that sense, I think regulation accomplished that goal. Of course, a few things, but on one hand, it leveled the playing field for virtual asset service providers, for exchanges, for crypto brokers, etc. On the other hand, that's my opinion, it created an uneven playing field for the new VASPs and entities that were already authorized by the central bank. The TradFi, we can say that word here. Let's say TradFi now has a competitive advantage over the new VASPs that will apply to operate in the crypto asset market in Brazil. That's one of the fights that I think will be important for the industry in the next year. As again, we said that before. Central bank wants to have a step-by-step approach. They want to go, like more conservative in the beginning. But it's important, even if you are conservative in that approach, that you have a level playing field between new VASP entities and TradFi entities. That I think the regulation missed that opportunity, but we'll continue to have conversations. And the central bank, again, is very open, and I think they will listen to the industry.
And then really quick, as far as the tax reporting requirements, because the local domestic exchanges have been reporting customer transactions to the State Federal since like 2019. And one of the biggest complaints is like, well, these foreign exchanges, they don't have to report, like they're not reporting anything, and we do have to. So under this new regulation, basically everybody's reporting, right? Like if you're Binance, if you're OKX, is that?
Yeah, they're all reporting 100%.
Okay, so everybody's it's a level playing field from that percent. Like anybody who's authorized to offer these services in Brazil is reporting. Like there's no more loopholes there.
No loopholes, absolutely.
And then maybe last question before we wrap up here, Cesar. I mean, what are like what are kind of the next steps forward as far as like timelines? I mean, what are the dates that people should be looking at? I know there's the February 2nd deadline when this resolution these resolutions will come into effect, but then I understand there's a few other deadlines over the next year that people should be looking out for.
No, it's a very important question. It's a question that we are kind of used to, because all our associates, clients, partners, they come with the same question. So I think that the rules enter into force on February the 2nd. So authorization requests must be filed within 9 months of that date. So VASPs that are already operating on February the 2nd, the process will occur into 2 phases. So basically, within 9 months, we need to, file the authorization package along with the Central Bank of Brazil. And basically, in these 2 phases, the Central Bank will verify if the VASPs are indeed active on February the 2nd in the first phase. And of course, they will check if the minimum capital requirement is shown by these companies. These minimal capital would vary from 11, according to our calculations, but from 11.2 million reais till 37.2 million reais. So the first phase would comprise basically that. And after that second phase, all remaining requirements that are normally applicable to regulated companies by the Central Bank of Brazil would have to be fulfilled and shown to the Central Bank, so that they can authorize these companies. So basically, the time frame that the department responsible for these applications in the central bank, they are expecting to have a 3 years authorization period from the beginning, from the filing till the end of the second phase. And a last point that it's really important to take into consideration, Aaron, is that after the first phase, or after filing, the companies will have to comply with a lot of obligations. So cybersecurity, internal controls, risk management. So after filing, so during the first phase, and the VASPs will have to support the central bank with some periodic, reporting obligations as well during the first phase. So it's really important for the VASPs to bear in mind that, because they will have to have operational and reporting conditions, so that by the time when they will file, they will have to be prepared to comply with all these obligations. So obligations policies regarding risk management, cybersecurity, internal control, AML, and accounting standards as well. And they will have to be prepared to, support the central bank with some of the reporting obligations that we just discussed during our conversation here. So basically, as a summary, I would have that to explain to you right now.
Great. Thank you for that. And then maybe Kaidu, we'll give you the last word here. But what are the biggest, maybe like gray area, unresolved questions still moving forward that have to be tackled?
I wouldn't call it a gray area, but there are a few things that we need to discuss with the central bank so we can have a more level playing field, as we discussed. So that's one thing that we are hearing our associates here at ABToken. But certainly, one of the things that we really want to address is creating some form of, a calendar for this minimum regulatory capital to be incorporated in the company. So instead of, needing to have 15 million reais in the beginning, we want that the companies can slowly contribute capital to their companies and have at least 2 years for them to finish the final contribution and have, this whole minimum regulatory capital. That's one of the things we want to address. And the second thing, we want that the VASPs, the pure VASPs, have the same kind of limits that other types of authorized institutions have. Broker dealers, FX broker dealers, etc. $500,000. So this is the two topics we really want to focus in order to create a more level playing field.
Kaidu and Cesar, you've both been really generous with your time here. Really appreciate you coming on the show to give us the download here. I still have a lot more questions, but I know we're out of time here, so probably have to do a few more follow-up episodes on this. But I think I think this is a pretty landmark moment for the Brazil crypto industry. Folks have been waiting for this for 3 years now, and I think it does bring a lot of stability and just legitimacy to the market. And I think, Kaidu, even what you're mentioning about just legitimizing the stablecoin industry, that this is a kind of a legitimate form of cross-border payments, of transacting like this legitimacy is a huge win in itself. So lots more to dive into here, but we'll have to save that for a future episode. But Kaidu, Cesar, really appreciate both of your time today, and thanks everyone for watching, and we'll see you next time on Brazil Crypto Report.